Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello traders, we had a wild day today. Congrats to the Bears, huge win for the Bears today, and a pretty memorable day with the S&P 500 down 5.7%, financial sector down 8%, QQQ 5%, healthcare 5.5%. You get the idea. So we've been looking for a blow off top. We've been looking for something. I didn't know how it would look because, again, I've never experienced it with the market as a whole. I'm used to seeing it in individual sectors and individual stocks. This is a little bit different than what I anticipated. When I look for it to happen, it's in the same day. It's a shoot up, a climax at that top, and then a big drop where you can clearly say that was our top being set. In this instance, we kind of slowly formed it. And if we look at the S&P 500 futures chart, the 4-hour chart gave us a double top, and then we just rolled over. So it was a little bit slower forming, but the rug pull is not surprising. And if you go back and look at videos over the last few days, again, I didn't know the drop's going to be this hard. I didn't know exactly when it's going to happen, but you know that the euphoria is going to happen and it's going to top out this way. You reach a point, I think it was yesterday's video where I was talking about everybody being on one side of the boat. This is everybody being on one side of the boat and the boat flipped. You have nobody left to buy, nobody left to go long, and you have nobody left to get stopped out of their shorts, and you have only people selling and only bears piling in. And it's just a mad dash to the exit. So you had two things happen. First off, we had the 12-hour RSI, and we were looking back and saying, okay, this 12-hour RSI has only been at this point maybe twice in the last 2 years, and the only other times it's happened were at the all-time high. So that was on the euphoria end, and now we have a scenario where the 4-hour RSI is currently at 19, and we can say, okay, this is clearly the lowest price or the lowest RSI on this time frame that we've seen since the COVID bottom. Is this the top of the COVID bounce? Probably. I would not be surprised in the slightest if this is that top. And it's because we're seeing things that we have not seen since that last bottom. So if we're looking at this on the weekly time frame, if I'm going to say this is our top of the COVID bounce, what I want to see is a daily lower high and lower low. And if you're a bear right now, you don't need to be feeling FOMO if you missed entries, because number one, the S&P 500, technically speaking, is still in a daily uptrend. The last daily high or low, looking at SPY, was 299.47. I don't anticipate we're going to keep a daily uptrend from here, but we know that the next time we bounce, we're looking for a daily lower high. So patient bears are patiently waiting to enter, whether it's scaling in or whatever your trading style is, entering on a daily lower high on lots of individual names, and then we're going to have to confirm the daily downtrend with a lower high and lower low. And once that downtrend is confirmed, then we can say, yes, our top of the bounce has been set. So right now I'm comfortable saying it's probably been set at this point, but that lower high and lower low, because this right now is just a straight up flush and stop losses get triggered and everybody panics. The question is, do bears follow through after that panic? And that's what that lower high and lower low tells us. So the weekly time frame, looking pretty toppy. High, low, is this our lower high? And now we're going to look for a tightening weekly range. Again, I would not be surprised in the slightest if this is how we're going to trade through the summer. So that's what we're going to be watching for as potentially the most likely scenario. I certainly would have anticipated the top of the bounce to have been found sooner and for it to have looked something like that. But obviously, the bounce surprised a lot of people, myself included, in terms of the amount of follow through that we did see. Is this due to headlines? Is this due to whatever they're saying about COVID or whatever the FOMC said? In my opinion, absolutely not. You always have to attribute moves like this to something. Again, for the herd to understand what's going on, you have to be able to put a newspaper headline and you have to be able to have CNBC talking heads explain to people, this is why this is happening. No, we reached a point where there was nobody left to buy. We reached maximum euphoria, and this is, in my opinion, it's all technical, and it usually always is. If we had some kind of surprise, crazy headline, then we could say, yeah, that's the headline triggering this technical move. but we don't. I mean, anything that's come out of COVID in the last 24 hours has been known. So I don't buy any of this being headline related. We just hit our peak. And again, just imagine the scales tilting. Everybody on one side and just boom, that's what it does. And that's what happened at the bottom. Just a V-shaped recovery. Nobody left to sell. Huge impulse move. So here's the opposite scenario. This is what I was talking about, where we have to see the follow through. We had a huge bounce initially, but it's once we changed that daily trend that the bulls believed it and knew follow through was coming. So same thing, huge move, but you have to see that follow through with the lower high and lower low to believe that we can get that follow through. So we're going to be looking for a bounce overnight. I don't expect, it could just be a 4-hour bear flag, but to say, if we're going to gap down open tomorrow without a 4-hour bounce, this 4-hour RSI is going to be in the low teens, which would be pretty astounding if that were to happen. We know the next time we bounce, we're looking for an hourly lower high. Didn't see any bounce today that was big enough for an hourly lower high to form, and then we'll just be looking for a 4-hour lower high. So what we have to see happen is an hourly trend change to the bulls, then we zoom out, then we need a 4-hour trend change to the bulls, then we zoom out, then we look for our daily lower high to be set. So one time frame at a time, and the weakness was obviously prevalent all day today. What stood out today? Hopefully you're all saying all of our major sectors dropping to low of the day at the same time. That's the first time we've seen it happen in a very long time, weeks and weeks. And obviously you see what it has done and the amount of follow through that the bears were able to garner on that taking place. So IWM, daily higher low was 136.41, fell right through it, increasing bear volume, very notable, closed at the low of the day 2 days in a row, and the daily uptrend has been lost. So certainly more confidence saying the top of the bounce for IWM has been set. One more note on headlines, you're going to see a ton of bearish headlines come out over the next few days. So just be prepared for that. The headlines usually lag the price action. So low, high, and now we're going to scout a higher low and a tightening weekly range through the rest of the summer. Most likely. QQQ, daily higher low 233.68. We held that level. Again, technically speaking, QQQ is still in a daily uptrend, but not anticipating that's going to hold. And we will be watching for, if we were to see a significant bounce from here, we would certainly be looking for the daily lower high to be set. But again, haven't even seen an hourly bounce. We're just going to look for an hourly lower high next time we see a bounce take place. XLV, big drop. And this one was more like a little bit of a rising wedge, but bottom line is we took out a ton of support levels. And again, taking out this many daily support levels, the weekly lower high, much more convincingly set. And on some names, I would condense it down. 2-week time frame, high, low, got right up to that all-time high, failed to break by 1%. And now we're dropping pretty hard from there. And again, next time we bounce, hourly lower high. Next time we change the hourly trend, we zoom out and we look for a daily lower high. XLF daily higher low was 23.17. We broke that level today. So just a complete dump. And again, tightening weekly range. Doesn't look the same as everybody else because of this chopping around action while it was being the laggard sector and everybody else was running hard. So we're looking at anything above 20.09 as a weekly higher low on XLF. But again, next time we bounce, we're looking for the daily lower high. Biotech sector rolling over. Just got real tight equilibrium, multiple tops. 3 tops at 106.11, and the bear break of 101.24 was the go signal for the bears because that confirmed our daily downtrend. Lower high, unable to break resistance, dropping to a lower low. Weekly time frame, consolidation clearly underway. QQQ and XBI are different because they're not forming tightening weekly ranges because they broke easily over the highs of the pre-COVID highs. So for me today, I ended up taking my account to an all-time high, playing the initial bounce first thing this morning. And I was playing CCL cruise liners, and then I was shorting jets on the initial top of the bounce. Obviously should have held that jets short for the airliners a lot longer. But I did end up trying to play this SPY bounce and ended up giving back some profit, certainly still within striking distance of that all-time high hurdle that I always want to stick around. But as soon as my initial plan was just scale into this weakness for the 4-hour oversold bounce. I made one entry at 307.50, And then I said, okay, this feels a little bit different. My original plan was 307.50, 306.50, 305.50, and that was going to be a full position. And I got one order filled at 307.50, and then I saw, okay, we're not changing the 5-minute time frame on any of these bounces. This feels a little bit different. I'm changing my game plan. I'm only going to stay with 1/3 position size of what I would have normally taken, and ended up doing some flips on the way down, but exited at the end of the day for a decent loss and gave back a solid chunk of the morning gains. But again, not blowing up my count or anything like that, staying protective. So if I'm going to be looking bearish from here, again, I certainly want to see at least hourly oversold bounces, and probably going to be patient enough to be waiting for daily lower highs before I look to make any entries. SMH, high, low, failed to break resistance, broke support. So weekly consolidation clearly underway, but anything over 126.11 is just a weekly high or low. So I'm very curious to see if these daily lower highs and lower lows follow through, because again, bigger picture, weekly time frames, if we do not confirm daily downtrends, these weekly candles aren't that daunting. We are just looking for weekly higher lows on a ton of these names. If you see increased bear volume, confirmed daily downtrends, then it starts to change, and then we start to say, okay, maybe we can see a significant pullback into the mid 200s and look for things to tighten up through the summer. That is the most likely scenario in my opinion, and just looking at tens of thousands of charts in all different sectors, when you see this kind of volatility, the most likely scenario is an equilibrium. The wild card, of course, is the Fed pumping money into the market, which makes things a little bit different than normal situations, but that's still what I'm going to be watching for. TLT. So TLT has seen a significant bounce at this point. We still need to change the daily trend here. Resistance 164.09. We did break that level, but we need the follow through, the higher low and the higher high follow through. Let's go to the monthly time frame here. Monthly higher low, certainly looking like it's been set at this point, and now we'll be looking back up at 179.70 resistance to see if we can break that level, or if we're going to see tightening ranges between that top and the low of 153.16. The dollar finally bouncing because money left equities in mass today, and the dollar seeing an inflow. So we're looking at resistance now of 97.07 short term. And again, for the dollar bulls to prove to us that we can see bounce follow through, we need to see the daily trend change. And remember, bigger picture on this monthly time frame, we've been watching for a higher low to form compared to the COVID low of 94.65. And if the bulls can change the daily trend back in their favor, it'll be the first indication that that monthly higher low is being set. So daily trend change needed there. Gold consolidating today. Today's the kind of day where the metal bulls would have preferred to have broken out to be a safe haven, and everybody fleeing stocks and going into gold. That didn't happen. We double topped at 1745, but we're still going to be watching for a daily higher low to form on gold, and it's still a potential inverse head and shoulders. Bulls have to change the daily trend for this weekly bull flag, the potential weekly bull flag, to be looking really good. So daily higher low and then continuation over the double top will be needed. Silver, watch that head and shoulders. Right shoulder may be forming, and if we drop down and break 1722, that will confirm this head and shoulders pattern. It's getting interesting because the question is going to be, how much fear are we going to see? Cryptocurrency dumped in correlation with the S&P 500. Bitcoin dumped maybe 8% plus from the highs of last night. So the question is going to be, is fear going to trickle into this metals market as well, just like it did on the initial COVID dump? And in my opinion, the severity of the broader market dump will dictate that to a certain degree. If I'm a gold bull, I almost want to see the S&P 500 chill out a little bit and bounce a little bit so everybody doesn't start panicking and fleeing back to the dollar again like we saw a couple months ago. So there is a potential head and shoulders here. And just on that note, Netflix on the weekly time frame, potential head and shoulders, left shoulder, head, maybe that's our right shoulder. Bears would have to break 397.86, which is still about 6% from where we currently stand. Miners. So miners with a big red day because the S&P 500 weakness dragged them down a good bit. We're going to have to see GDX hold 31.22 and break 34.92 to confirm a daily trend change. Without a confirmed daily trend change, this weekly bull flag potentially will go out the window, in my opinion. One more lower low, and we're then going to be looking for a weekly higher low, absolutely, but no longer likely to be a bull flag. And GDXJ is similar. We're in equilibrium. High, low, lower high, double bottom, lower high, all about 42.92. And that level's potentially in play tomorrow, and if not tomorrow, then maybe on Monday. Oil pulling back, looks like some correlation with the S&P 500. Again, look at the 12-hour time frame. It's not exact, but lower high and then lower low, pretty sizable drop. And again, you look at S&P 500 and see what did it look like on the 12-hour time frame. High, little lower high, and then drop. So very similar. It just took a little bit longer to play out on oil. And you could say on oil that we had the daily bull flag, failed to confirm, and now we see a little lower high and lower low. So we zoom out and look for weekly consolidation, and we're going to look for a weekly higher low on oil. Natural gas breaking short-term resistance on the daily. 1769 is the next level to be watching. Continuing to battle the weekly exponential 12-period resistance. We'll see if the bulls can close over this level tomorrow, which would be the first time we've seen it in months. Keeping an eye out for natural gas. Let's see if people get interested in natural gas bullish while oil starts to pull back. Very curious to see if that's what's going to end up happening here. So that's where we stand. Again, this market environment is very unusual. This volatility is very unusual. Stop losses are essential on every single trade. The last thing you want to do is have one wrong trade take back a month of profits. I used to do that. Then I learned to place stop losses on every single trade, and it significantly changed my game as a trader. And that is a lesson that will be burned into your memory if you do not adhere to it eventually. So it's going to be very interesting overnight. Pretty much watching for whether it's going to be a 4-hour bear flag or not. Again, if we don't see any kind of 4-hour bounce overnight, I would be shocked, and I would be personally very aggressive on bounce attempts again tomorrow if that were to happen. Otherwise, currently watching on the 2-minute time frame a tightening range, which again, not going to matter a whole lot because it's on the 2-minute chart. But this is what I'm watching for the moment, although it looks like we are potentially breaking bearish. So heading back down towards 3,000, which is 300 on SPY. We're pretty much right where we closed. And again, it's just a question of what kind of bounce can the bulls put together overnight? And where we stand tomorrow is going to determine when I wake up, am I going to be looking bullish or am I going to be looking bearish? If it's a solid bounce, I'm going to be watching for a 4-hour lower high. If it's not a solid bounce, and if it's weakness all night, I'm going to be looking for a bounce. So have no idea which direction I'll be looking tomorrow. It all depends on what happens overnight. Hope you're well. Again, congrats to the bears. Volatility. Ooh, almost skipped it. The VIX. Huge breakout. So it was, it definitely looked like a falling wedge. And if you go back and look at how do we break these patterns after the big spike in volatility, and then when things calm down, it's usually in a falling wedge pattern. Again, it was definitely tricky because you never know when it's going to happen. We could have easily seen another week of weakness here, but the break happening all at once. You can draw this trend line a couple different ways to how it would fit, but bottom line is smashing through a ton of previous price levels. And again, this was the most likely scenario on how it would happen. Over the past couple of weeks, I've talked about this, and again, I couldn't imagine what's it going to be that's going to trigger this, because we've already got the bearish headlines. We've already got, the protests. We've already got COVID and potentially the second wave. What's it going to be? In this instance, the FOMC acted as a bit of a catalyst, but really it was just nothing really new that led to it. Just happened all at once. Scales tilting. Just use those visualizations. You have scales and you're piling on a pebble on one side as everybody's getting more and more bullish. Stocks only go up, never going to go down. And then all the pebbles fall off that side. Have a good rest of your day. Do good things. I'm running out of end of video content. I'm going to recycle something. I don't know what.